I think that people are inherently bad at managing risk, especially in fast moving and volatile markets where you're just more predisposed to having those swings get the better of your emotions.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Seattle, thank you so much for joining me today. Super excited to chat with you. All right, Seattle, you're the CEO and CIO of Baus Capital. Baus Capital is a multi-strategy crypto quant fund. Previously, you were a trader at Block Tower Capital and are a 10-year plus veteran of the prop trading world. All right, so Seattle, take me all the way back. When did you first get involved in trading? And was that like a passion of yours when you were younger?
Yeah, so I originally started trading when I was like 12. I got into trading by extension of uh, having a resale business when I was younger, and pretty much I always had issue with kind of the notion of like finding buyers and sellers. Um, I found kind of hidden niches in like high-end musical instruments and like electronics and certain things where like the value of those items by a lot of people is underappreciated. And if you find the right buyer that like knows what it is, like there are significant margins. But on these, kind of more obscure things, specifically, musical instruments and things like that, um, that are very pricey, it's a matter of like finding it and then finding that right buyer. And so there's a lot of time in holding inventory. So in finding out about the stock markets, that kind of enamored me. And uh, I got into trading and never looked back. And yeah, it's been my life's obsession that's taken me from equities to futures markets and now into crypto the last 8 or 9 years.
That's so cool. Okay, so wait, you'd be like buying rare instruments to then go resell at a higher price? Like was that on eBay or where were you? How are you doing this?
eBay, Craigslist. My grandfather used to drive me around to go like sell stuff on Craigslist, and he was like, we every now and again we'd like go to like a kind of shady like meeting place, and he's like, I don't know if we should be doing this, and I'm like, it's okay, like we're selling a violin, like it's whatever, and it all worked out, but yeah, some stuff in person, but a lot of stuff online, and that was interesting. As fun, and ended up using all of those profits that I had accumulated to get into the market, and in my typical fashion, in my younger years, went all in. I did not think to just dip a toe, and I don't recall exactly, but I know I wiped out at least 60 or 70% of my portfolio within like the first couple of months. And um, I never really taken losses like that before, like because when I would buy and sell things, like I knew my price and I was only buying amazing discounts, right? And so in the markets definitely, humbled me. And uh, I've always kind of disagreed with the saying of like if you do something once, like it's okay. If you do the same thing over and have the same like bad result, like that's the definition of insanity. I don't really jive with that because I think there's like so many um permutations of like similar things that could like go in different ways. But just like holistically, yes, if like something really really isn't working and you don't like get the picture, like I'd say after 2 or 3 times, it's an issue there. I was humbled because in my younger years, like I did not follow that at all. And so I was on repeat making a lot of the same mistakes for the first 2 or so years that I got into trading. And then I started, I think, to get the hang of it more. I would say by no means was I a good trader a few years in, but certainly in those 2 years learned more than I could have imagined ever learning in school or anything like that. And so I actually at that point in time, was kind of like, I don't need school anymore. That was my view. And school happens to coincide with equities open and close. Um, and so I made the pretty drastic decision to leave school at like 14 or 15 and homeschooled myself. And, trading was all I've ever focused on ever since.
That's awesome. Okay, so were you very interested in math because now you're running, quant, and a lot of your background is quant, connected to quant. So did you have those math skills from an early age, and over time with your trading, you increased those skills and just got better and better, or how did that like? Tell me about that pathway.
I was always in accelerated math from as long as I can remember. That is definitely my strong suit. Um, but I would say, like, compared to a lot of the folks at our firm, I mean, I am many levels below them. We have some, mathematician PhDs on the team, and I mean, I don't come close, but my view on markets is a lot different than like a classical quant. So I kind of spent the first 10 years in what I would say was discretionary slash semi-systematic trading. And then only kind of in the last 5 or so years have, really been more committed to the quantitative stuff. Although up until 3 years ago, I was still doing a good bit of discretionary. Um, and so all that said, like, I think there's a lot of things that by being a discretionary trader, you learn that is far more um, important than just the numbers that you're looking at or the data that you're looking at. So my approach to building models is actually less mathematical, and but that's also why I hire people that are have the aptitude for mathematics, because you those two things are well intertwined, as even with having asked the question, more mathematically apt people tend to do quite well in quant finance.
All right. So at what stage did you were involved with TradFi and TradFi markets? When did you discover crypto? And when did you decide, oh my gosh, like I have to spend the majority of my time here and go to Block Tower?
A lot of the sector that I covered in equities, U.S. equities, were like renewables, cannabis, biopharma, um, pretty kind of volatile, more emerging sectors by and large. Um, the cannabis sector had a lot of issues with banking, right? The state legalization, but illegal on a federal level. And so many of these companies, after raids and, you know, uh, some being preemptive, knowing the risks, started accepting Bitcoin as form of payment, and and participating in some of the conference calls, and also some of this stuff popping up in investor communications on news wires and so forth. It was kind of like, okay, what the heck is Bitcoin? I knew nothing about the existence of digital assets prior to, and this would have been in 2016, and then kind of dipped my toe into the space in 2017. Did pretty well. um my style of trading has been very order book and order flow driven. So pretty much all things microstructural in nature is what I focus um, on the research side of things, even today. That worked very, very well in crypto, especially at the time. Um, but I couldn't get over the fact that you have no FDIC insurance on any of these accounts. GDAX was taking regularly a couple weeks to answer basic support tickets. They don't even have so much as a phone number at the time. And then it's like, okay, these exchanges are very new, and there's been many hacks at the time that people are aware of. So I'm being told, stay away, and this exchange scary. I mean, I'm kind of trying to figure it out at this point in early 2017. And the thing that really killed me is it's like, okay, well, as an active trader, you need to have money on these exchanges. I mean, now we have nice off-chain settlement solutions, and other partnerships being forged with larger financial institutions to actually keep assets off exchange and settle in a much more efficient manner. But you didn't have that then, and so it was like, okay, if you want to be off exchange, you got to put your money on this little thumb drive looking thing called a ledger. And I couldn't get over the fact that it's like, okay, I could have $1 billion on this little thumb drive looking thing that costs $70, and there's a hardware malfunction. It gets stolen. I leave it in my pant pocket and it goes in the wash and gets broken to bits, or hardware malfunction. I forget, these secrets. Um, that there's no recovery. And there was even a report out from Ledger, mm, probably 2 or 3 weeks ago, that they estimate that I believe it's around 3 million Bitcoin are lost forever, is their estimate. And that's you do the math on 3 million Bitcoin. There's a max supply of what, 21, 22 million. I mean, that's a pretty significant portion. um and so I just saw all these risks in the space, and at a certain point, as the market just trudged higher and higher all throughout the year, it didn't really feel it felt like the risk reward was no longer there. So I kind of just got out of the space at that point. I then continued to cover crypto equities. Um, Stuff like GBTC and MicroStrategy, but also stuff that is tangential. So like Nvidia back in the day was not an AI behemoth. It was getting crushed by AMD. People were much more focused thinking the future was going to be CPU and not GPU. And Nvidia was always heavily focused on GPU. And so there was a point in time where there was a pretty notable beta to the movement of Bitcoin in some of these last bull cycles. So there you have the protections. You can, trade options if you want to express exposure a little bit differently as a US person. So I did that. Fast forward to 2021, I kind of started paying more attention to crypto again, um, kind of out of the blue. And I saw all these new exchanges that I'd never, interfaced with or knew about before, like Binance, becoming this massive, perpetual futures exchange, and so much VC money flowing in, and a lot of hedge funds kind of having popped up in between 17 and 21. And so I would say I kind of started catching the crypto bug again. And equities and futures just don't have the same degree of excitement that crypto does, and is also not as early. I just, the potential, the risks are not there, but the potential also just wasn't there to the same degree. And so, decided to kind of take a leap into crypto full time. And, shortly after is when I joined Block Tower, and then ended up leaving Block Tower at the end of 2022, and started kind of slowly putting things together for Baus in those months, and established formally in April of 2023.
Right. So when you're setting up Baus, the world's your oyster in terms of like it's your own firm. You can decide the strategy, you can decide the allocation, you can decide the infrastructure, what technology you're using. How do you with that much, with that wide of a canvas, what do you decide to how do you decide to focus your scope?
Yeah. So that was what was really interesting for me. Being kind of on the institutional side of crypto, um, I was really surprised by just how different the landscape felt of these institutional firms compared with what you'd see in traditional finance. Um, a lot of them were and still to this day face a lot of single point of failure vulnerabilities. My focus and kind of review of those things is mostly on the trading and research side, but also there's clear holes, that were exposed, throughout 2022 and many of these firms operationally and from a risk perspective and other areas that were overlooked. So um, I I was kind of taken aback by what I saw in the quant space, especially. And so that is really what made me realize that I felt I was far more equipped to go and launch a hedge fund and crypto and do it the right way than basically any of the other managers that I was having conversations with. And I felt highly confident in that. Um, as I mentioned, I started out in discretionary and then moved more and more into semi-systematic trading that was very order book and order flows driven and found some good niches in there in that kind of general area of microstructure research and trading. Um, it always fascinated me to have things fully systematized, and so that was kind of the path that I had been going on prior to joining Block Tower. And especially in a very high vol asset class, risk management is absolutely crucial. One, there's reaction times, but also I do believe that there are exceptions in this world, exceptional people, but I think that people are inherently bad at managing risk, especially um, in fast moving and volatile markets where you're just more predisposed to having those swings get the better of your emotions and making emotional decisions in those points in time. Having things systematized kind of changes that. The tricky thing with quantitative trading that I always say from how I view building these systems is um, you get the systematic management. What you end up giving away is the flexibility. So you're introducing a lot of rigidity. Um, there are ways to reduce the rigidity of systematic models, but by virtue of what you want them to do, which is to be systematic, they're very process oriented. Um, and so that's I think a very fun topic. It's extremely challenging to um, to basically get that ratio of systematic but not too rigid to kind of that perfection that we're always, striving for, and I guess probably not hitting. Um, so yeah, that's kind of what the appeal was to me. And high frequency is very dominated and very specialized. It's I think still a very attractive and potentially very very profitable in these markets, and we've in more recent time done some of it here. But my focus was really on medium frequency and multi-strategy, because when we talk about point of failure risks, the one of the most crucial things there is diversifying away on the strategy side. In 2022, we saw a lot of these market neutral funds blow up. A lot of them blew up because after 3AC, basis and funding went to hell, and a lot of them just didn't even have a trade anymore. It's not necessarily that they got clobbered and were down a bunch of money. Their trade went away. And that was another thing that kind of fascinated me, because it's like that's just from a business perspective, such a point of failure to only have one recursive arbitrage strategy that inevitably was going to go away as the markets got more efficient. And that's all you've got. that's what your entire trading firm is, centered around. So like I don't get that either. I think basis and funding are fine trades to be in like a portfolio, but a portfolio of other strategies, other orthogonal strategies. Um, that is the sort of thing. It's an arb. At the end of the day, you make hay when the sun is shining. There's been kind of long-term cyclicality with those trades that I think is starting to change on the funding side. Basis kind of always exists, but is getting more and more compressed. Um, so yeah, I think those were kind of the big things in launching Baus and kind of the ethos of the firm. Focusing on medium frequency and trying to be very thoughtful about everything we build and everything that we do to reduce our likelihood of failure.
When you say medium frequency, what is the average hold period for? I guess it maybe depends on the strategy, but what would you say is the average?
Yeah, it's everybody has these terms, right? And they're so ambiguous, probably on purpose. In our particular case, the average hold time right now, I would say, is about a half a day, roughly. Um, so it's not just like sitting on positions. It's also not like, we're constantly turning the book. Um, and we do have some things currently and in development that are much quicker, and a few that might be quite a bit slower. Um, but that's kind of the our bread and butter is around that half a day.
When you're talking about this portfolio of strategies, right now you guys are doing, I mean, from my understanding, directional, market neutral, arbitrage. Are those like the three broad categories of strategies within the portfolio?
Yeah, so we're mostly focused on long short systematic. That's our heavy focus. And then we have market neutral, but it's kind of been on the sidelines for a few months. Um, I just really think again stuff like basis and funding is not really worth running with other things that we have being so much better, in my opinion. We are launching market neutral though in the next month or so. A more fully fledged, built out market neutral program. Um, and so we're very excited to be rolling that out. That's something that we're been actively working on since the beginning of the year.
Which bucket of these strategies do you think has the highest potential longer term? And longer term as in like the next 1 to 3 years.
Risk adjusted or absolute returns?
I'd say give the answer for both.
Well, on the absolute side, it's undoubtedly long short systematic. Um, on the risk adjusted side, it's really market neutral, delta neutral sort of strategies. Um, but this is where our belief is that you should be combining all of those, and really be optimizing for a mixture of the absolute and risk adjusted, right? What is that kind of meet in the middle optimum? Um, just kind of how I talked about with building systematic models, it's a push and pull. If you want it to be systematic and have really good risk mitigation and, great trading, you also um, don't want to introduce too much, of a rigid nature to the strategy. Very similar in this case, and I think that just comes down to preferences. But for us, in thinking about how we optimize a portfolio, we want multiple different flavors that are not correlated to one another, and we want to thoughtfully combine them and really optimize the total output of that portfolio.
One of the things I think about, and I don't know if this is like has any relevance, but with market neutral, I hear Jane Street, Sig, Citadel, et cetera. They're coming in, or either they're already in, but coming in, they're making broader inroads. So, do you think market neutral, the alpha is just going to be competed away over the next few years, or as these entrants like fully allocate resources to the space, or do you think that the crypto space is so broad, so fragmented that alpha within the market neutral category will be rich for some time?
So a few thoughts on that. One, I guess, people listening can probably take a fair guess at who it is. I'll leave the name out, but there there is one firm that's literally 40% of the Binance flow today. That suggests that if you're trading on Binance, there's a very good chance this group is on the other side of your flow. Um, the top of book is very toxic. Um, I see a massive compression in the last 6 months in arbitrage. Um, there's still nooks and crannies that have very nice and exploitable opportunities, but the capacity of the arbitrage has gone down quite a bit. I'm seeing some of the smarter arbitrage firms that are crypto native kind of going into DeFi by necessity. The returns that their LPs expect, they cannot achieve on centralized exchanges anymore through basis or funding. There's probably a couple exceptions because they're incredibly good. But by and large, it's not the most viable anymore. Um, so, some of these DeFi opportunities are very, very interesting. I see them. We do not actively participate in DeFi. Um, my view there is I'm not an expert on these counterparties and I don't know DeFi well enough. If you can't really properly underwrite the counterparty risk, um, you have no business being there. So, like, what I mean by that is if you're making 20% a year, what is the risk of like existential loss? Do you have to make 20% a year, do you have all your money on one given protocol or it's spread across 100, right? A lot of people use insurance. There are insurance policies you can take out. People will pay away 500, 600 basis points a year for that. It's expensive. My argument is you see this with insurance all the time with people getting injured or car accidents or whatever, or, damage to a home. The insurance companies do a great job of figuring out how to not pay out things. And especially when, there's something big. Like imagine if everybody had insurance on like, one of these like major exchange meltdowns, right? Where like people lost everything. The insurance company may be insolvent at that point if they have so many claims that they have to address, right? And so I think there's even flaws in that. But getting back to the root of your question, I do think that as these larger firms are coming in, and many of them have been here for years, as they're just now that Trump's been in office and people kind of feel safer coming into crypto, at least in the public eye. Um, yeah, I mean, we're definitely going to see a lot of compression, and we've already seen that in volatility. Vols have been super muted. Uh, there's been some decent market moves, and even so, vol has been super muted. Um, and there's a lot of hedging activity going on. That's very clear. Um, and a lot of that activity, can further drive compression. I think there was a $22 billion Bitcoin and ETH options expiry today. Um, those are big numbers if we look back and remember where this was 5 years ago.
Do you have any concerns going forward with as these TradFi entrants with all their resources start to enter crypto? And I guess from now we're not even talking Citadel, we're talking like, I don't know, whatever, Tiger Cubs or what just traditional hedge fund guys with them entering with, their capital base and talent and whatnot. Will they end up dominating crypto markets, you think, over the course of the next, like the longer term, 5-10 years plus?
I didn't catch the one word. Did you say downing crypto markets?
Dominating. Will
Oh,
they
dominating.
yeah, will they end up being the dominant players? And will the crypto natives, because of lack of resources or, comparatively to lack of resources, will they be pushed aside and will just the markets be dominated by TradFi?
Well, I think you have to define dominated. So if we're talking dominated in the sense that they're controlling the top of book, oh, 100%. That's already happening, I promise. If we're talking dominating in the sense of holding the most amount of crypto, Sure, because these are already super well established firms with massive amounts of AUM and huge LP bases that can, the amount of money that a crypto fund, works on a whole year to raise, these guys can make one phone call and have 10 times that. Um, I do think that's where we'll also see consolidation in this space of firms. We've already been seeing more and more of that, I think, throughout the course of this year. But I do feel that many crypto firms have already been getting drowned out and will continue to. Um, I think on the long only side, that's definitely been compressing. A lot of long only funds have been, massively underperforming Bitcoin for years. Um, and their outperformance in isolated, time frames does not justify the extra volatility that they've endured. Um, so I think that's one of the things that ends up for people that wanted that sort of exposure being attractive in these ETFs and in that DAT and the DATs. They just want the crypto exposure. They don't need a ton of extra alpha. Um, if you want extra alpha, in my opinion, that's where you come to a quant fund. That has, crypto denominated share classes or something like that. Um, but yeah, I think these digital asset treasury companies are, obviously many of them raising a lot of money and they're going to buy up a lot of crypto. Many of them have already bought up a lot of crypto. Um, uh, I think that, ETH and Bitcoin are in kind of a unique spot because I view them as, commodities. The rest of these cryptos I look at as basically, protocols, companies, ecosystems that are, tokenized in the form of coin, token, whatever you want to call it, that do have value. And I think that the TradFi folks are still trying to figure out how to actually value these things. And I would actually argue that it's much easier to value a lot of these, medium and large caps than it is, Bitcoin. Bitcoin's a hard one to value. Um, something like Hyperliquid. I'm not saying it's easy to value, but you can see that they have a consistent user base and they have significant revenue. That's uh, uh, massive daily revenue, and you can kind of twist the numbers enough to come up with a multiple, right, at what this thing's trading at. Um, so I think as TradFi comes in and kind of adjust to that, I actually think that you'll see a lot of these TradFi folks helping the market because they're bringing a lot of money in, and they're gonna put that money into the best projects. There's good crypto native researchers, but like from personal experience, the best researchers, hands down, are all from TradFi. Um, and those people are getting into crypto, some of them, and many of them will get into crypto more and more, and they'll do good research and vet these existing and new coins that emerge, new projects, and I think that they will really help to proliferate that growth. Um, but at the end of the day, time will tell.
You mentioned the different share classes at the start of your kind of statement there, and um, do you offer different share classes? And if so, why? Like, are there certain LPs that want certain types of share classes specifically, or just tell me about that?
Yeah, so we do. Uh, this, to be clear, it's not a solicitation, any of what I'm about to say, but we do offer USD share class as well as the top four: Bitcoin, ETH, Solana, and XRP. Um, we manage that through a fund vehicle, and we also do managed accounts with those same denominations.
Okay, so can you so SMAs? So why are you doing SMAs, or like is there any? Is there any advantage of doing SMAs versus having it in the primary fund?
SMAs are very popular in crypto. They've also been commonly used for a long time in traditional finance. But I think they become especially popular in crypto, especially after the wake of FTX. Um, I just think, unfortunately, throughout the years, crypto has attracted a lot more scammers, probably per 100 than any other kind of capital market, liquid market. Um, and so smart investors want to be careful naturally. If you have the option to have things on your own balance sheet versus invest off balance sheet, most investors will always opt for keeping things on their own balance sheet for visibility and to protect their risk. And so that's really the purpose that managed accounts or SMAs serve is, we as a trading firm can manage those accounts on behalf of the client who still has full and total control of their assets. Um, and we really do prefer more of the traditional fund structure, but the fact of the matter is that um, more and more investors we're seeing, or even as the space continues to grow, are still opting for managed accounts, and it doesn't make a very big difference to us at the end of the day. We're gonna trade. We're gonna hopefully make money, and we get paid for having good performance. And so whether that's in a fund or in a managed account, we just have to have the infrastructure to serve both, and we do have that. We have built that up. So yeah, it's a pretty core part of our business. It's certainly a larger part of our business today than the fund.
Very cool. So the XRP, I'm so curious about XRP. I talk a lot of smack about XRP, which is silly because I don't know too much about it, but so I should learn more before talking smack. But is that a popular share class? I don't know. I can't imagine it being, but maybe it is.
It's not at the moment. I kind of have big plans for it. I jokingly have talked a lot of smack about XRP. Um, my view on XRP is like almost kind of a more binary one. I think it's pretty much going to do absolutely nothing and turn out to be a total dud. Um, or I also have this theory it could pull some weird sort of GameStop type of move. Um, it is just so retail heavy, and I was actually talking to a friend of mine last night who's a very large XRP whale, and he was like, you can't trade this thing. Um, and I'm like, you're kind of right. I mean, we offer it in the share classes, but we don't actually trade XRP today. It's not one of the assets in our tradable universe, and it is admittedly quite hard to model. We have, and we're contemplating, doing something with XRP quite soon, but it does move very strangely. And so he makes a good point, that in a qualitative way, he discerned the same thing we see in a qualitative way, which is that it is very tricky to predict and to model. Um, but I think that's largely because there's just so much retail in there. There's definitely the potential, if people get hyped up enough about it, that it could just go on some run and attain some absurd market cap that it never should be allowed to attain. um, I don't think that's impossible. But I also don't hold strong views on XRP fundamentally or anything like that. And that also just isn't what we do here at the firm. I can hold my personal views, of course, but I have them on many other tokens, but less so on XRP. Um, But yeah, it's not been a particularly popular one. I'm hoping that it will be. Um, our kind of belief there is there's so many holders of XRP, and it is the third or fourth largest coin by market cap. Um, you would think it would actually be quite popular. Um, but I think there's a lot going on in, if you want to call it XRP DeFi, where there's, I'm seeing some very, very attractive yields out there. And so I think that might be detracting away from investment via XRP into hedge funds, because this is yet another case where, why are you going to pay a hedge fund to manage your XRP if you feel like you can get a commensurately or similar return, and manage it yourself. Of course, I think there is a logic flaw there, and do you understand the protocol risk you're taking on? And in most cases, I think people would say no or answer yes when the answer actually should be no. But I digress.
All right. So risk management. You've spoken about risk management multiple times. It's extremely important to how you operate your firm. Tell me about how you think about risk and what kind of systems or technology have you built in order to mitigate risk?
Yeah. So, I mean, at a high level, the way that I look at things is, from my prop days. If you don't make money, right, at a certain point, it's not tenable anymore. You go out of business if you're a hedge fund, whatever. But the number one thing is not losing money, right? And so we were looking at everything from kind of a risk management first perspective. But to what degree of risk we can take, and all of those things is, kind of boils down to what the strategy is. And, is it a strategy where we're, taking on a lot of delta at times? Or are we completely delta neutral? Or are we market neutral, where, technically, we have an equal amount long and short, but there's still, potential to be off sides if, one side of the trade blows out because you've got different asset pairings or whatever. So a lot of those things are to be taken into consideration. Um, the one thing I always think about is it really is more a function of your sizing than anything. So, like, people early in the day with Bitcoin, there kind of wasn't a great answer for most, like, institutional investors to not have invested in Bitcoin when it was, say, 1 to 5K in 2017 and starting to kind of get popular, get talked about on CNBC and so forth. And many of them didn't because they're like, it's too risky. And my personal opinion is the answer shouldn't have been it's too risky. The thought process should have been this is risky, but has a lot of upside potential. How much can I afford to allocate to this? Um, and so again, on the side of our trading, a lot of like how I view things ends up being a little bit more practical and less, mathematical. So on the risk management side, I mean, at a high level, all of our trades have a stop loss. We have a few different types of de-risking that, for proprietary reasons, I don't want to go into. Um, and at present, we just trade Bitcoin, Ethereum, and Solana. The reason we do that is mainly for risk management. Capacity happens to be kind of a secondary benefit of that. But um, essentially, like, if you're trading altcoins and there's like a cascading liquidation, I mean, those things can have wild wicks. And not to say that Bitcoin and ETH and Solana cannot, but keep in mind, Bitcoin is a $2 trillion asset now. This thing doesn't trade as crazy as it used to. Um, People might be complaining about this, 10%, 12%, whatever it is, drop in the past month, but that's over a month. People need to remember back to when Bitcoin would drop 10, 12% in 10 minutes, 15 minutes. It doesn't do that anymore. Um, we have protections if it does. Tail risk mitigation is the key thing. And that's mainly what I'm thinking about on the portfolio and risk management side when it comes to the implementation of new models and also the management of our existing is all surrounding tail risk. So um, we all in life have been like, oh, that's not going to happen. Something personal, business, work, whatever, and it does. Like crazy things happen. And so, you know, everything relies around, being able to manage tails pretty much. And we want to be able to curb them from a risk management perspective, and then we want to be able to ride them when it's to our benefit, when we're on the right side of the trade. Um, and so we have a pretty good internal framework about how we're researching these things and developing our frameworks that we've developed for mitigating risk on a strategy level and on a portfolio level. A lot of that also ties into the technology. Um, so like one thing about Baus, we spent about a year and a half building out all of our tech and trading infrastructure and research infrastructure before we went live. Um, a lot of people know me as a trader, and for a year and a half, people were like, "Wait, are you actually a trader?" Like, it's been 6 months, a year, almost a year and a half. Like, you're a trading firm that's not even taking trades. And obviously, that was tough for me to field. But the reality is, um, I I'm a risk manager. I don't like go and build things and deploy them before they're ready and have that beyond the expense of the investor. I build things the right way, and only when I'm really really comfortable do they get productionized. Um, we we've been very very diligent about that. Very thankful for how we've done that and for our team and the degree of our methods and how methodical we've been with respect to a lot of that stuff. um but yeah, there was kind of a lot of that base infrastructure that had to be built out, and from that standpoint, you want to get all the risk stuff right. You don't want to launch and build that in parallel. um And then we do use some third parties that we realize can do certain things better than we can. Um, Very minimal use of third parties, but there's certain things that either aren't worth our time building, or the amount of time and money and what that added benefit would be to have it internal just isn't worth it. Um, and that just kind of boils down to also, very carefully vetting your service providers that you're working with.
In terms of that infrastructure and technology, what was the heaviest lift? And like, what would you wish that you could have just paid for? You're like, man, we're building this entire system. I wish I could have just bought this off the shelf from some experts who are just building that one product.
The answer is so clear to me. So it's definitely the order and execution management. Um, I was being told by, you know, uh, some industry friends since day one, don't do that undertaking, at the beginning. It's too much. It's going to be very complicated to maintain, and it's going to be very expensive. Um, I had different views for very valid reasons. I wanted us to be able to do any sort of trade, like even the highest of highest frequency stuff. Um, Building everything internally as we did allow us to do those sorts of trades. It also for I what we were very small firm at the time. It came at a very big cost in that it was so much to manage. very, very, very extensive, access to nearly 20 different exchanges, built entirely from scratch. Um, the constant need of, we need more engineering help. Um, you know, this has gone down, being woken up at all hours of the night, having team on call 24/7. It's a lot. Um, for a firm like, a Jump, it's nothing. They have tons of people. It's what they do. It's their alpha, right? Um, as a small firm, it's just a different sort of scale and focus. And at the end of the day, what Baus is really great at is research. We have really good research technology. We have really good researchers. I think that the method that we've introduced, firm wide, and trying to take this multi-strat approach of orthogonal alphas combination, that should be the focus. And so I think that it ended up really detracting for a while. Um, and ultimately, we do outsource that today. And there are imperfections with the outsourcing of that sort of stuff. And at some point in the future, it may make sense to revisit building things in house. But there's a time and a place for everything. And I think the lesson there was the time and the place to build your own execution, if you're gonna do it, if you need to do it, is at a later stage in the business, and certainly not from day one, uh, given what we're good at. If you were like launching a new crypto fund today as a high frequency firm, you cannot use anything out of the box. There is nothing out of the box that will probably work for you.
Wow. All right. So you mentioned your team previously, and you mentioned you want to bring some folks on, for example, that were there are some PhDs in your team specifically around math, and because you're like, I have good math skills, but not as good as these guys. When you're thinking about building your team, is that how you want to hire? Is like, okay, what are my weaknesses? I want to bring people on that have those as strengths, or like, yeah, how do you think about building out the team over at Baus?
It's a complicated answer, actually. It really depends on what what we're hiring for and kind of in what uh, department. I mean, we're kind of all one team, but at the end of the day, the way in which I'm going to be thinking about hiring a new engineer versus somebody like Jordy, who we brought on recently as our global head of trading, it's very different. An engineer, I'm looking for somebody that has a very specific kind of niche skills. I would say master of one and not of many. When hiring somebody for a role like global head of trading, obviously I'm looking for somebody that knows trading and risk management really well, and that knows portfolio construction, um, is very comfortable with dealing with crisis situations, and is just very on the ball and prepared, and that also knows how to manage a team. um, I would say that that's more of a multi-tool. That's somebody that is very competent, maybe not in 100 different things, but deadly in 5 things and good at 10. Um, so the optimization there really depends on kind of who the person is, and what they're needed for, and what the firm is hiring for.
It seems like you're hiring folks that have potentially, your things that you're weaker in, and you're trying to build out a team of just top tier of every single aspect of your business, which obviously you're trying to do. But when you're going about that process, how do you think about what building up the full team? Are you close to having the full team in place? Do you need to have a few more hires, or at what stage will you feel like, okay, we're 100% staffed here, and we're totally set? Maybe never.
I feel like we're just gonna keep building and building. I think that with like 20 people, you can be very comfortably equipped. 20 to 25 people. You kind of figure at that point you have a couple IR, BD, cap formation people, maybe three. You've got maybe 5, 6 researchers, 2 or 3 traders, got a CTO, maybe a CFO, COO, CEO, CIO, all that, maybe a couple salespeople, an executive assistant or two, you're pretty much at 20 right there. That's how you see a lot of funds constructed. From there, it just is a function of like, are you building like some behemoth? So, like in the case of what are you, I mean, I guess I can spill the beans a little bit. Again, not a solicitation at all, but um, we pretty much our next 2 to 3 years is going to be very heavily focused on building out these more alpha factory models. So that's kind of the base of what will be launched in about a month with our new market neutral. Um, I call it a strategy factory. Um, I think that with that being our very core focus, you really need a lot of researchers at a certain point to continue building, little alphas to implement into the factory. And also there's all sorts of modeling that's required on a iterative basis to further and further refine these things. It's very involved. It is definitely a it's, as I say, it's a factory. It does kind of grow into hopefully a big profitable monster. And so even hiring one additional researcher can be a lot of added value if like all they focus on is like finding alphas and inputting that into the model for discovery. So I could see us, kind of getting to like 20, and then, really mainly from there hiring researchers and traders. I definitely do try to hire people that are like-minded. I think, driving forward the vision of a firm, you need to hire people that are at least like-minded. Um, but certainly that have skills that are unique to mine. Um, I know what I'm good at, which is a few things, and I know what I'm not good at, which is a hell of a lot more than what I'm good at. And that's okay if you're diligent about bringing on the right people that are very good at those things that you're not good at, but also at what I at a startup like we are, that also are like-minded enough to stick with it. They're in a startup. It's I think it's especially important to find those like-minded people because you really do need more entrepreneurial folks for the most part. Um, yes, I mean they work for a firm, but like they want to build something, and that's very key. Um, People at very large firms like a Tower or a Millennium. Um, Not saying some of them aren't entrepreneurial, but a lot of them are very happy being there and getting a large base, something cushy, and having their upside, right? And they're happy to stay there. And a lot of those firms do a great job with talent retention. But a startup is very different, and talent retention is very hard, especially when you're hiring very good talent.
Awesome. Okay, so before going the closing questions, I do want to touch on some kind of big picture items, or just kind of random questions. So, DATs, we've spoken previously about DATs and kind of your view on them, but could you kind of elaborate on your views on DATs and how this could potentially end or grow or change?
So, like our view of Baus is pretty much that we thought since the very beginning that the implications of these DATs are kind of fascinating, less so the DATs themselves. I mean, most of these are like just buying up crypto, not terribly exciting, and they'll do some yield plus sort of stuff, lend it out, and generate fees from that. There's definitely a wide variety at this point of strategy that these DATs have, and I think some of them are promising, but it feels like a lot of the same. Um, I know that in some meetings I've had, some of the big investment banks each have like 200 DATs pending on their desks. You may have seen the news drop by the Wall Street Journal last night that the SEC is looking into, I believe, about 200 DATs for potential insider trading. I had actually alluded to this suspicion in either our August or our September investor letter. Um, Essentially, the kind of idea being, let's say you owned $1 billion of Solana or XRP, and then you go and launch a DApp, or maybe you don't launch the DApp, but you help facilitate the creation and obviously are an advocate of it. And then essentially you're expecting all this money to come into this DAT, which is used for the single purpose of buying up Solana or XRP or whatever. And like assets move better when the float is lower, right? Um, Locking up supply, having less liquidity out there. So it's almost like, to me, I felt that a lot of people were going to abuse this by using both the knowledge that there is a coming DAT to buy their own, say, $1 billion of Solana. And then the money that's used by the DAT goes and buys up a bunch of that coin, potentially driving up the price, if not driving up the price. If they did it responsibly and, did it, in multiple blocks through and over the counter at reasonable prices, or, they're slowly, limit buying, or even slowly market buying on a TWAP or something. Even if that part was responsible, you're still locking up supply and applying some form of pressure and taking some of the sellers out of the market in that particular range. So yeah, it was kind of felt obvious that there was going to be some weirdness, and just with the sheer number of them launching, I think it's only a matter. I guess we kind of started to see it start just a little bit, but it's only a matter of time before if you have hundreds of anything, like even we have hundreds of crypto exchanges, right? Many of them blew up and were mismanaged and misappropriated funds and stole funds and got hacked and all sorts of other things. Same thing will happen with a few of these DATs at a minimum. Just it's a numbers game. It's not rocket science to think this one through. And headlines and crypto sometimes don't go well together because things get sensationalized. And so I think as soon as there's like some bad news that hits, like this DAT, didn't have their coins stored properly and they just got hacked. Or I don't know. This one's chairman, gets indicted for insider trading, or this one was using a leverage strategy and blew up, and this, or there's a basket of DATs now trading below NAV by over 10% or whatever. I think that there's definitely with any kind of new thing like this, all these hitting the market around the same time, you kind of just setting the industry setting itself up for a lot of headlines, and it probably at this rate stands to lose more than it stands to gain. I would say a lot of the bullish headlines have kind of already been dropping like left and right for like 6 months now. I think that is part of the reason we're kind of seeing this market pull back a little bit starting potentially. Um, it's just like I almost feel like almost all the bullets are used up, and so I'm not making any sort of statement that like this is like the end of the bull run. I mean, maybe it is. I doubt it, but certainly I think we're about to see a bit of a pause here and retracement, if I had to guess. Yeah.
So with stablecoins, right now we're seeing lots of, massive stablecoin companies, obviously. Fintechs are going to start using stables, and then eventually businesses, and then, hopefully like everybody, right? In that world, how can you generate returns if the world is going on chain and lots of the economic activity is being facilitated in stables? Do you see an opportunity for yourself in that world, like separate from all the crypto assets that we're talking about?
It's a good question. Um, I haven't thought about that specifically. I can't say. Um, Obviously, from investments from clients, we accept stables. Um, Other than that, we don't really interface with stables much. We from time to time get paid in stablecoin. I definitely think that it's much more efficient and cheaper. Um, I actually, like a lot of crypto folks were always complaining about how difficult the banks were to deal with and how easy crypto is, and I never felt that way really. I was like, well, I've never really had much trouble with the bank. Um, these days, now that I run a business, lots of problems with banks all the time. Um, I've had probably this year 3 different wires get lost. Um, and you're talking a month to like figure out where that is. One institution says, "Oh, I sent it back." The other one says, "Oh, we never got it." It's like, how is this like that hard? Like, money left one account, did it hit the other account? Yes or no? If it didn't, send it back. Like, it's kind of crazy. So it's undoubtable that or undeniable that the settlement and the rails for which stablecoins are built atop is far superior to the antiquated systems in place. Um, I'll be more interested to see how banks actually adopt um, stablecoins more than anything. Um, like for an example, will I in 2 years time like be able to have somebody send you know USDT to my Bank of America, and it just shows that I have that USDT, or it shows it because it's pegged to a dollar that I have this amount of dollars now, and that balance is reflected accordingly. It'll be interesting to see, but yeah, I haven't thought very much about how we may, as a firm, interface with stablecoins beyond accepting it from clients. Yeah, I don't have any profound opinions there or thoughts.
Yeah, I guess I'm thinking like, well, first of all, I'm bullish on stables, so I'm just like, okay, if this is going to be the future, how can I make money from this? That's kind of number one. But number two, it's, I'm thinking like, oh, will more companies have treasuries in crypto assets that they're going to want to generate yield on? That's kind of maybe something. And also, okay, if there's a US dollar stable, there's going to, in theory, be stables for many, many countries, and we'll have like you can trade FX but like with stables, and maybe there's some unique thing about crypto that enables a crypto native firm like yourself to generate more returns there versus like a Jane Street or whatever. Like, that's kind of like what I was noodling on was like, hey, is there opportunity there?
I think there could be an opportunity. I don't know if we'd be specifically advantaged though, compared to like a Jane or a Jump. Um, but yeah, I do think there's more stable coins coming. I mean, in FX, obviously, there's tons of volume. So I think crypto is very similar to FX markets back in the day in so many ways. Um, and similarly, we've seen a lot of more vol in those, or volumes in those markets, and a lot less volatility. Um, Obviously, there's pockets of large ball, and we view crypto in the same way. We think that the volatility is going to be continuing to compress over time, as it has by and large for the last 8 years. um, but there will be notable pockets of volatility that are idiosyncratic to individual assets, and just times where the market is particularly bearish or bullish, where the moves are kind of outsized across the spectrum.
All right, Seattle, this has been incredible. It is time for the rapid fire closing questions.
Okay.
Alrighty. You can kind of you have to answer this one. You can give kind of a nebulous answer if you want, but you have to say something. All right, 3-year Bitcoin price target. This is your personal opinion.
I just have an A or a B opinion. I really think that in 3 years, Bitcoin is either at like 20K, or I think it's somewhere in between like 300 and 500K.
Interesting. In what scenario would it be at the 20K mark?
Basically, the amount of hype has been crazy the last couple of years, and I do think it is very difficult to value Bitcoin. And I think that a lot of the move in Bitcoin has been driven by, the regulatory adoption that's some of which has been ushered in, but a lot is still, being waited upon. And the fact that, Bitcoin has been seen in crypto as the store of value. Um, but I think that, traditional hedge funds coming in are actually going to be looking at things that are more fundamental, like what revenue, what's the potential user growth here, what really is the network value. I think they will have a easier time finding that in things like Hyperliquid or like Solana, right? Not saying those things go up or down, but it's a little bit easier to justify in my personal view. Bitcoin, I think, is trickier, so I think there could be a big fall in dominance. I also think that if there is a meaningful bear market, which I put as a a decent probability in the next 3 years, um, they can just extend far more than people think. Like if a bear market started today and over the course of the next 6 months took us from 110K Bitcoin to 60K or 50K, I think everyone's view about the perspective of being at 20K in a few years' time would be very changed from what most people might say today. And then, on the 3 to 500K target, again, throwing a dart to a dartboard here, but I expect that, if broadly the asset class continues to see its upward trajectory from a regulatory and adoption perspective, volumes, and the swarms of money that have been coming in, that's probably a realistic target if we lowered, the 5-year CAGR by a bit.
Awesome. All right, you could give yourself one piece of advice before launching your firm. What would that be?
Uh, don't give up would definitely be number one, which I didn't. So I don't know if I need that advice. But there were, lots of times where that um, was the easy thing, and maybe the smart thing to have done. Obviously, in hindsight, now I don't believe that, but certainly at the time, starting Baus 3 weeks after, 4 weeks after the collapse of FTX, was a terrible time to get anything accomplished. Basically, from a fundraising perspective, or you know, um, building anything in crypto. Um, so yeah, I would say, don't give up. There's definitely a lot of other pieces of advice that I would give myself, though, that I've learned along the way.
Speaking of that, what has been the most unexpected lesson that you've learned during your journey?
The most unexpected, there again also a few answers, but I think I underestimated how difficult it would be to kind of find the formula for hiring the right people. You think that, you have somebody that's great on a resume and they're great, and I'm telling you that that is often not the case. In any startup, in any, new venture that has high risks, it is absolutely crucial to find, the right people, not just the right talent. And so, uh, I have definitely been surprised by that, and uh, those lessons have, I think, made me very good at finding the right people now. Um, but yeah, that was definitely a big challenge.
Awesome. All right, last question. How do you define success, and do you feel like you have achieved it?
I think for every person, what success means is a little bit different. Um, for a lot of people, there's monetary attachment to what success means, and like anything else, if I say, I'm rich, well, rich to me might not be rich to you. Uh, your number might be 10 times bigger than mine. So, I think that um, success for the firm means that we're continuing to grow. We're continuing, to put out returns, growing from an AUM perspective, new strategies, new verticals. Um, you know, uh, I'm not in this for the recognition, and if anything, I'm an extremely introverted person. But um, to be at the point where Baus is maybe not on on billboards. They're clearly not. I don't even think um, general solicitation rules would permit such a thing, nor would I do that. But um, you know, to be recognized as like this is one of the top firms or the top firm within their domain. That's what success looks like to me. My view on uh, building models and building a company and everything is, it's one foot in front of the other. It's all iterative. Um, you know, Iterations uh, compound and make big impact. And so that's what we do. And I just want to continue building and iterating upon, our foundation. And I don't really see an end to success where there's like a definition to it to me. Um, I hope that one day it kind of clicks of like I made this firm very successful. We're too early for me to say that we're there today. That's absolutely for sure. I do feel like we're on our way. If we weren't, I would be rerouting. So I'm happy to be able to say that. Um, and I think success to me is basically never quitting and never having to quit. Um, there's times in everyone's life where like something's not going the right way and you have to throw in the towel. As long as you're not throwing in the towel, like justifiably not throwing in the towel, and continuing to progress, you're doing something right. And so as long as there's like that positive trend and progression, and I'm doing what I want to be doing, and building what I want to be building, I view that as success, which can also be gone in an instant. So it's important to always um, you know keep it moving.
Amazing. Seattle, this has been incredible. Thank you so much. Where can people learn more about yourself and Baus Capital?
Yeah. On myself, you can follow me on Twitter. My name is a little bit hard to forget, I've been told. So you can find me there on LinkedIn. And then Baus is www.bauscapital.com. You can also find us on LinkedIn.
Amazing. Thank you, sir.
Thank you. It's been a pleasure.